Hi, this lecture is going to cover taxes. So what we'll cover is the general tax formula, but also just in general questions that we hear often, such as, why do I have to pay more this year? Why do I have to pay it all? Will I get a refund? And how much do I owe? So let's talk about this. The best way is to start at the very bottom. So if you are trying to find out if you or answer a question maybe for a client is going to have to pay or get a refund, starting at the bottom is going to be the easiest way to understand how this works. So at the very bottom is tax payment or tax refund. That is the question. All right, how do we arrive at that? Well, in its very basic sense, we're going to look at the total payments that we paid in, and we're going to talk about where those came from, compared to the tax liability. And we're going to talk about how to calculate that. All right, so what we're going to do is calculate our tax liability, that's the total amount that we owe, and compare that to the amount that we paid in. All right, so let's see how we do this. First, most people will receive a W-2. That W-2 will look something like this. It'll have the correct tax year on it, and you'll be able to see your income, and that's what we're going to be looking at first, our total income. So for this one, it would have your name and who paid you, and it would have $40,000. So let's go put that in as our income. So our income is the first step in calculating our tax liability. And then if we had any adjustments, all right, and these are going to be things like if we have self-employment or if we have our own business, they're called adjustments for AGI. All right, and then the next thing that we're going to have is our adjusted gross income. This number is simply our income plus or minus any adjustments that we have. After that, we will take a standard deduction or itemized deduction. So right now for a single person, the standard deduction is $12,000. We would take that standard deduction unless we had other itemized deductions that were more beneficial. For example, if they equaled more than $12,000. So examples of itemized deductions would be your home mortgage interest, your property taxes, your car tag. Those are the big itemized deductions. But for a lot of Americans right now, the standard deduction is greater, so we're going to assume that standard deduction is better in this situation. That gets us to our taxable income. So it would be your adjusted gross income less the standard or itemized deductions. That's your taxable income. Then you would apply your tax rate, and there are tables that can do that for you, but let's just assume a 10% approximate rate. So you'll say your taxable income times your tax rate, and that's going to get you to your tax liability. So we're getting a lot closer now because we're just going to, that's the total amount that we owe. To find out whether or not we have refund or tax due, we just need to see how much payments or credits we have. All right, so where can that come from? Well, basically from our tax paid in and credits. All right, so the place that we look to most often for tax paid in is our withholdings. So we're going to look at our W-2 to find out how much withholdings we had. So this $3,000 is our federal income tax withheld. What this means is that the employer held out $3,000 of this money and paid it to the IRS every period, usually monthly, sometimes quarterly, on our behalf. So this is the amount that we have paid in. So we'll call that our federal withholding. And for this situation, it was $3,000. All right, how did our employer come up with that $3,000? They actually came up with that amount based on something that we filled out for them called the W-4. So the employee would complete the W-4 and it is going to tell our employer how much to withhold for us. It wants to know things like about how much will your income be, how many dependents do you have, and do you want to withhold some extra money. So this is what determines how much our employer withholds for us. All right, so it was $3,000 here. Another place that we could have tax paid in is if we made any estimated payment. So this is used more often for people who have businesses, but anybody can pay in some extra during the year. The reason that this would be is because you can't wait until your taxes are due. You're supposed to pay in as you go. It's called pay as you go. And so a certain amount is due each month. So we would call this estimated payments if we had any. For us, we won't have any in this example. The next thing that we'll have are tax credits. So there's lots of different credits and they change as the tax laws change. But right now, one popular one that we have is the dependent care credit. So you may be able to subtract dollar for dollar amount out right here as a dependent care credit. Another one would be a qualifying child tax credit. All right, and so if you have 2 children, depending on their ages, it could be up to $2,000 each. So let's just take a $2,000 one. Well, let's not right here because we pretended like we were single and weren't head of household. All right, so my total payments that we paid in this situation then would just be the $3,000. So take a look. Our total tax liability was $2,800. We paid in $3,000. So it looks like we are due a refund in this example. So we would have a $200 refund. Now let's just change the scenario a little bit. Let's say that we only withheld $1,000. In that case, we would owe $1,800. So to answer these questions, why do I have to pay? You have to pay because the amount that you withheld and all of your credits was less than your total tax liability. So how would you show that to the IRS and how would this look on the form? This is the Form 1040 that individuals file, and your total wages, in our example was $40,000, would go here. And then we would come down here. Our standard deduction would have been right here, which is the $12,000. So our taxable income would be here. Then it would calculate the tax for us, or we would calculate the tax, depending on if we were doing this by hand. And then we would put in our credits and our withholding, and it would come down to our tax due or our tax refund. So let me know if you have any questions. Thanks.